Welcome back, East Texas. We're joined now by Gary with Kelly Community Federal Credit Union. Thank you so much for joining us here today.
Thank you for having me.
So I understand we're talking a little bit about loans today, which can be a little overwhelming to some people.
Absolutely.
So what do borrowers need to do to get approved for a loan?
It's a great question because so many people are familiar with buying a home. They understand what they want in a home, but they really don't understand the loan side of getting a home. But what I like to say is if you keep with the 4 C's, then your life will be a lot easier, because that's what lenders look for when they're underwriting a loan, whether they're going to approve you or deny you.
So what are the 4 C's? Because I'm guessing it's not 2 Chanel bags.
So the 4 C's are credit, capacity, capital, and collateral. So credit, most people are familiar with. You understand we have to pull credit. The better you pay your existing bills, the better your chances are getting approved for a home loan. There's no perfect score, but you'd like to keep your credit score above 740, but you can get financed with a much lower credit score. Next C is capacity, and that is your ability to repay the new debt that you're going to have. So what we do is we take the new mortgage payment and add all your existing loan payments for the month and divide it by your gross income for that month. You want to stay about 43%, but debt to income ratio, but you can go higher. And then the next C is the hardest C because it's capital. How much money you've set aside for your down payment plus closing cost. Most loan programs require down payment, but what people don't know is down payment plus closing costs. So start saving now. That increases your chances of getting approved for a loan. And the last C is collateral. What we're looking for there is the shape of the home, what condition it's in. But we're also looking for, is it a unique property?
So what would make it a unique property then?
So an old example of a unique property is the dome, the geodesic type homes. A more modern version of a unique property is the barn dominium. They're growing in popularity, but they are still a unique property. Now, it does not mean that you can't get finance for them. It's just there's fewer loan programs for a unique property.
Okay, so is there too young of an age to start, thinking about buying a home, thinking about applying for a loan, or is it kind of for anyone?
It's for anyone. If you start younger, start thinking about it younger, you put aside money. CNBC did basically a savings program at a 5% rate of return. If you put about $52 a month away for 15 years, you can have your 5% down payment. Don't fret about that. I know it's 15 years, but that's $35 if you're 20. So that's pretty young to be a homeowner.
That is pretty young. So if people want to learn more about loans and borrowing money and stuff like that from Kelly Community Federal Credit Union, where can y'all find more information?
I would love for you to visit www.kellycommunity.org, or you can just give us a call or stop by one of our offices on Grande or at 5th Street across from TJC.
Awesome. Thanks, Gary, so much for stopping by.
Thank you.